Origin Finance. I've been in the finance industry myself since 2007, having worked for the UK's largest privately owned finance brokerage. In 2019, I actually left that company to set up Origin Finance because I wanted to do things a little bit differently. Our approach at Origin is very much educational as opposed to salesy, and what we're trying to do is just fill in the knowledge gaps for some business owners and finance directors, and things that are just maybe holding them back in growing their business and getting access to valuable funding that they need.
Yeah. So you just said that you worked for one of the big boys in that industry.
Yeah.
So your experience as working for one of the big boys, so now running your own firm, what's that been like?
It's been interesting. Certainly, I mean, I had no previous experience of running a business prior to setting up Origin Finance. Obviously, I've been working with many businesses over the years, and when you deal with the finances, you tend to be a little bit more involved in those businesses than others. So had a lot of experience from that point of view of different companies, different sectors, and things like that. But luckily, when I started Origin, there was a couple of sort of key individuals that I recruited sort of straight away that were able to smoothen the journey, if you like. But certainly starting your own business is not easy, that's for sure. So well done to anyone that's done it, and so congratulations. And
well, one of the podcasts that we have at UKBF is called Drive, which is by Richard Osborne, and he speaks to different founders, directors, high-level people in business to find out what drives them in business. Hence why I'm asking the question from somebody who's made that transition from being an employee to running something quite big.
Yeah.
You know what I mean? So, so we're here to talk about finance and how to get finance for your business.
Yeah.
This is get external finance.
Okay, so great question. There's generally two avenues. Either you will go directly to your bank, or you'll use a finance broker. They're the sort of the general two avenues. Since the 2008 recession, more and more people have moved away from their high street bank. Banks in the 2008 recession were sort of very quick to close up shop and stop supporting businesses, whereas we as a finance broker, we have access to just over 130 lenders, some of which are high street banks, but we range right through from high street banks to private banks, investment consortiums and high net worth individuals. So the vast array of pots of money we have access to is quite significant. And since 2008, more and more customers year on year have looked to move away from bank funding to more sort of modern finance products. There's a lot of competitive lenders in the marketplace outside of high street banks that are always competing with one another to win business. So certainly direct to your bank is one option, but that is only one set of criteria. You know, if you don't fit that bank's criteria, if they don't like the sector you operate in, if they don't like the customers you work with, if they don't like sort of what path you're on as a business, then unfortunately that's a decline with them. Whereas if you come to a finance broker, you know, like I said a moment ago, we have access to 130 plus lenders, all of which have varying criteria. So some like certain sectors more than others. Some will specifically look for businesses with a turnover of between X and Y. And then other lenders that we work with are happy to work with brand new start businesses, which is also a lot of what we do. So I think that when it comes to finance brokers, a lot of historically, finance brokers was quite a dirty word. You know, a lot of people probably viewed us in the same category as traffic wardens and things. Apologies if there's any traffic wardens listening or watching. But the reality is now we're in our personal lives. You know, we use finance brokers a lot without knowing it actually. So one thing I always say to people when they're sort of a bit apprehensive about using a finance broker is look, if your car insurance was up for renewal today, what would you do? They always say, we just jump on Go Compare or compare the market or whatever. Well, they're actually just brokers.
Yeah.
So all that software platform is doing is searching the market for the best price for you.
Yeah.
Because with business finance, it's a lot more in depth. There's a lot more parameters to take into account.
Yeah.
There is no sort of go-to price comparison website. Whereas if
Maybe you could build one.
Absolutely. Well, it's a lot of people have invested a lot of money into them in the past, and they've just not managed to get off the ground due to the amount of sort of technical parameters that go into business finance. But that's our job as a business broker, is to keep finger on the pulse with all of the lenders that we work with, make sure we're fully aware of their up-to-date appetites, their up-to-date rate structures, this, that and the other. So when a customer does come to us, we can very, very quickly narrow our panel of 130 lenders down to maybe 5 or 6 lenders, being realistic. And then of those, we start off and say, right, who's going to be the most competitive for this customer?
Yeah.
That's the lender we go to first. If it doesn't fit with that lender for whatever reason, if there's something the lender doesn't like or whatever, then we just work our way down the list. But that's our job as a broker, really, to just shortcut the process for the customer and get them straight into the correct lender.
Yeah. So before I move on to my next question, you touched there about the route of going through the traditional format of high street banks and also the modern format. What are the pros and cons of either way in 2023, where we are right now? What are the pros and cons of me going down the route of a high street bank or the modern route in which you're talking about?
Yeah, so great question actually. So there was actually a study done by QuickBooks. I'm sure everyone knows of QuickBooks, the online accountancy software. There was a study done by Nick at QuickBooks a few years ago that found out that the average bank loan application took 6 hours. So that means a business owner has to take 6 hours out of their working day in order to complete an application with a bank, without knowing actually if the business even fits that bank in terms of criteria.
Yeah.
Whereas with ourselves, it's literally a 10 to 15 minute information gathering call. And then we might request a little bit of info from the customer, maybe some up-to-date accounts and possibly some the last 3 months business bank statements as an example.
Yeah.
We will then handle all of that
Yeah.
process with the lender and really take out a lot of the back and forth with customers. With high street banks in particular, they can be quite old-fashioned with the security that they require from customers. So quite a lot of the time they'll ask for business debentures and things like that, which is quite old-fashioned.
Yeah.
And it sort of ties up a lot of the security within the business, in my opinion, unnecessarily. Whereas a lot of the lenders that we work with, they look at it and say, look, are we happy to lend this customer X amount?
Yeah.
Yes, perfect. We don't need any additional security. So there's definitely pros and cons. Interest rates can fluctuate quite a lot with high street banks. Mm-hmm. We've certainly seen a lot of occasions recently where we've been able to beat the offers that long-standing customers have got from their high street banks. And equally, we're seeing a lot more customers, more and more sort of each week, given the sort of unusual situation we're in with recession and whatnot on the horizon. We're seeing more and more customers approaching us that just can't get funding from the high street banks.
Yeah.
And again, going back to the 2008 recession, banks were very quick to shut up shop and sort of cut the funding lines to their customers. And what I always suggest, and the lessons I learned from that, and seeing how my customers were affected by that, was really having multiple funding pots available to you is the way to protect yourself from that. So you might still want to do some finance with, I don't know, HSBC Bank. If that's your bank, that's great. But what I'd also advise is start to build a couple of relationships with a couple more lenders.
Yeah.
Build that history, start to take a little bit of funding from them, so that if one of them does exit the market,
yeah,
that's no problem. We've got 2 more. We've
yeah.
still got more on our panel, but it's good to have that relationship built with a couple more lenders,
yeah.
So that you've not got all of your eggs in one basket.
Yeah, yeah. So, something that just stands out to me, like you said, in the day and age that we are right now, interest rates we don't know what's going to happen tomorrow, that
No.
sort of thing. So if you're saying that the more modern route in which finance brokers and they have probably more competitive and better options than the high street banks, then that certainly seems like a viable option of a massive pro.
Yeah,
to be
absolutely.
honest. So, why may a business need financing?
Several reasons. Firstly, probably a great point just to clear up a very common misconception is that a lot of businesses think that that finance is only for businesses that can't afford to pay outright. That's actually not true at all. The vast majority of finance that's utilised by businesses is utilised by very cash-rich, highly profitable businesses. And the reason they take finance as an example is because of the associated tax benefits and things like that.
Give me a second. Just going to have a little quick pause. We're just having a few, I know Insta Live, you guys can hear us fine. We're just having a few audio issues. Just going to quickly fix those. Sorry, Chris.
That's all right, no problem.
I guess you can actually just carry on talking, and we might just revisit it again for when the cameras start rolling again.
Yeah, absolutely fine.
Yeah.
So just so on that point, yeah, a lot just to sort of clear up that common misconception. Finance is for business. A lot of it's overhyped. There's a lot of negativity around things, and we just spent a lot of time having sort of reassuring conversations with customers, just giving our 2 pence worth really on where we think interest rates are going to go, and actually giving live examples of pounds and pence, what that would mean to a business, and I think the difference in interest rates between, I don't know, let's say as an example, between 6% and 10%, is not as significant as a lot of business owners think. There are certainly some businesses where that is the difference between a profit and a loss, and I do understand that, but for businesses as a whole, you know, the difference in those percentages is not going to cause the headaches that perhaps they initially thought. So again, it's just to have conversations with customers, try and preempt the future a little bit. I mean, obviously none of us have a crystal ball, but it's very important for businesses when they're running their cash flow projections and their finance projections is just having conversations with finance brokers and finance providers a little bit earlier to actually understand what types of facilities could be available to them, when it's going to be available, and things like that.
Yeah, no, that makes a lot of sense. So we're just going to roll back to the initial question I asked, which is why may businesses need finance?
Yeah, fine. So I don't know how much of this we caught before we had to cut, but firstly, just to clear up a bit of a misconception, is business finance is for businesses of all shapes and sizes. A lot of business owners think that finance is just for businesses that don't have the cash to pay outright, and that's simply just not the case. There can be significant tax advantages to taking business finance. Keeping working capital protected is quite a big one. But the main reasons that customers approach us for finance would be purchasing vehicles, plant machinery or equipment for their business. They could be moving offices and they want to fit out their offices or their warehouse or their retail premises, restaurant, whatever business they're in. We can actually fund the entire fit out. That's something we do a lot of. Working capital, so where businesses are looking to grow and expand and perhaps are just having a few pinches on cash flow, whether that's seasonality, whether that's that they've just won a big order that they've got to front a lot of money for in order to secure the order and deliver the product. We can fund things like that. Another big one for us is invoice finance, so that's just releasing cash from unpaid invoices. Specifically, that one is just for B2B, so that if any listeners are businesses that are raising invoice to other businesses, then we can potentially fund those, particularly if there's a large large payment terms of maybe 60 or 90 days. And then the last one from our side is to pay an upcoming VAT bill or tax bill. Again, a lot of businesses are seasonal. And just because they're looking for funding for a VAT or tax bill doesn't, that's not a negative from a lender's point of view. A lot of customers are in that, and a lot of the time it's just down to seasonality of the business and just cash flow within that.
You just said something there that a lot of high street lenders may see a business, maybe how long they've been running for, how much money's coming into their business, and they may write them off straight away and say, no, we're not going to give you any support, any finance. But why is that not the case for some of the lenders that you have connections with?
That's a great question, and that's something we see, to be honest, that's something we see more often than not. And I suppose without sort of bashing the banks too much, I suppose the easy answer is I think that our lenders are a bit more commercial, a bit more commercially minded. We have a lot of customers come to us. We had one customer come to us recently that was purchasing a large piling machine. So it's for foundations for a building as an example, but that particular customer that came to us, they were quite new, they were a couple of years old, they'd done a bit of trading, they were making a small amount of profit, but they actually wanted to borrow about £500,000 for a used piling machine. Now, that was the amount they wanted to borrow was actually double their last year's turnover. They went straight to the high street bank. The high street bank said, look, this just doesn't make sense to us. What the high street bank missed was the fact that customer has won a significant contract for the next 5 years, where the income of that contract is actually nearly 4 times the amount of the monthly finance payment.
Wow.
That's the bit that the bank missed. The bank declined it. Our lenders, with a bit of back and forth to explain, to add some gravitas to the application, explain the contract, explain where the strength lies, and things like that, combined with the customer did put in a 10% deposit as well, just to show willing, but we managed to get that one secured. So I think that as an example just shows the commercial minds of our lenders versus high street banks.
Yeah, so that's to me, that's just showing the advantages of also going through a company such as yourself, because that relationship that you may have with those lenders, and like you said, adding that a bit of meat to the application or to support whatever the person is trying to do, basically got it over the line.
Yeah, absolutely. I mean, we work with some tick box lenders that have an automated acceptance system. This customer, this requirement would never go through an automated system because it just won't tick enough boxes. But what it does do is for what we call a storybook lender. So when it's not quite a straightforward lend, when you need to factor in a little bit more about probably future income of that machine or things like that, then we go to what's called a storybook lender, where an actual underwriter will physically touch that transaction. They'll look at every single document we send over. It's our job to represent the company or our customer in the best possible light. What we want to do with an underwriter is firstly not take too much of their time up, but we need to write a very comprehensive proposal so that once the underwriters read that proposal, they understand what the business does and what the business is looking to do, what the business is looking to purchase, what the funding is for, and most importantly, what that funding is going to do for the business moving forward in terms of income generation.
Yeah, well, that's great. So how easy is it to access finances for businesses?
I would say slightly more difficult today than perhaps it was prior to the mini budget, but not dramatically different. Certainly, some lenders are tightening their belts and just being a little bit less risk averse. But equally, for all of the lenders doing that, there's some other lenders a little bit further down the food chain that are perhaps sensing an opportunity to write business with a caliber of customer that they're not used to.
Yeah.
And I did see this in the 2008 recession as well. Actually, is just where lenders' appetites as a whole, particularly your tier one lenders, started to tighten up. But then actually there was quite a lot of sort of tier two lenders, so slightly further down the food chain, but they were quick to mop up all of the business that the tier one lenders wouldn't. And the same with the banks. When the banks stopped lending in 2008, a lot of our lenders were quick to sort of mop up all the excess. So there's always funding available, but you know it is getting slightly more difficult. But that's when I think a good finance broker comes into the mix. Again, we have great relationships with a lot of lenders, and we can very quickly place these requirements with those lenders just by explaining a little bit more, putting a little bit more meat on the bone. Yeah.
How long does the process normally take? So if I came to you, after this question, I'm going to paint some scenarios and some personas just to get some, because some of the people that are maybe watching and listening, maybe startups, they may have been running the business for X amount of time, and they may have certain amounts of money coming into their business. So I want to paint some scenarios. But how long does the process normally take to get finance?
So it can be as little as a few hours. We've certainly had customers that have approached us, particularly when it comes to cash flow money, and they need access to money quick in order to pay staff bills or VAT bills or whatever. We can do that in a matter of hours. But the average lead time with us, because we cover such a vast array of transactions, the average lead time from us from proposal to the actual agreement being activated is between 5 and 7 working days.
Okay. I think you've already answered this question. So going to the scenarios, right? If I'm starting up in business today, and okay, let's say I started business last year, January 2022, and I am making candles. I use this scenario in the last one. I'm making candles. I've sold. I'm making £200 of profit every single month, and I need some finance to potentially buy some products to continue to make the candles. So I've been running 1 year, and I'm making £200 every single month, and I now want to apply for some finances, some business finance to buy product. Am I the sort of company that could get finance?
Yeah, Yeah, absolutely. In that particular scenario there, so the company is just 1 year old.
Yeah.
So many of our, so because that's effectively what you're looking to do there is stock finance. So
Yeah.
there's no equipment for us to purchase. So that's very much just a commercial loan. I would say around 50 to 60% of the commercial loan providers that we work with want to see a minimum of 2 years filed accounts for a business.
Yeah.
So the fact in this scenario you've only been trading for 1 year, we will still certainly have some options for you, but they're likely to, rather than to be a longer term of 5 years, you might be restricted to a 2 or 3 year period on that. But in that scenario, you've said that that's for stock.
Yeah.
So if it's for stock, obviously a shorter period actually makes more sense because you're not going to be holding on to that stock for 5 years. So yeah, absolutely, we could fund that.
Yeah. So how big or how small does a business need to be to be eligible for financing?
So there is no minimum and maximum. We do, some of the clients we funded recently are one sort of person operations that might have a contract with Amazon to do parcel delivery, and we've just financed the van for them so they can get up and running. Equally, we've just funded a multi-million-pound warehouse fit out for a household alcohol brand that's just moved premises, and they have about a £200 million a year turnover. So there's absolutely no minimum and maximum size of business. When it comes to accessing finance, a lot of lenders do have a £10,000 minimum limit. So anything below £10,000 can be tricky to get financed, and it can be quite expensive.
Yeah. When you say £10,000, the business has to be turning over £10,000.
No, sort of the business needs to have a requirement of £10,000 or more.
Okay.
We certainly can do the smaller ones, but you're very restricted on lenders, and they start to get sort of quite pricey.
So they basically won't. They won't lend anything less than £10,000.
Yeah, as a general rule.
Okay. Okay. Fair enough. So that was how big or how small, but how long does a business need to be running for, or established for, or operating for them to be eligible for financing?
So we do finance for brand new start businesses. Equally, I think the oldest company we've dealt with, from memory, was just over 200 years old. So again, there is no criteria for that. It goes back to knowing your lenders. So of the 130 odd lenders we've got, if you approach me as a brand new start business, then we can instantly restrict that 130 lenders down to maybe 20 lenders that will look to finance a new start business. So yeah, absolutely no minimum, maximum time trading on that.
So as a new business, what do I need to bring to a finance broker to show or to be eligible for that financing? Do I need to have a business plan? Do I need to have what the projection will be for the next 5 years, next 10 years? What do you need from me to see for me to like have a serious contention to get what I need?
Yeah, so for new start businesses, obviously lenders don't have any. There's no company history to go by. So the lenders, what they'll do for a new business is they'll look more closely at the individuals behind the business. So they'd want to see a brief CV to understand, what that person's experience is. They may or may not have experience in this particular sector, but a CV just to show what experience they do have. Secondly, they'd look a little bit more closely at the person's individual credit rating, how they, what sort of personal wealth they've got, if anything, and then lastly, they'd look at the particular requirement and the resale value in the kit if it was to go wrong. So if a new start business wanted finance for a van, that would be very, very easy, because if that business were to fail, our lenders could quickly collect that van and sell it for a significant amount of money very, very quickly. If it was a new start restaurant, as an example, that wanted finance for the furniture and the fixtures and fittings, that will be a little bit more challenging.
Yeah.
We certainly do a lot of those, just to clarify, but again, there's less lenders, because if that business were to fail, then there's very little resale value in the equipment with finance, therefore the lender could be more exposed.
Yeah.
So they just like to look a little bit more at the individuals behind the business. And then to answer your point on business plan, it's not essential, but the majority of the new start lenders that we work with do want to see a business plan and at least 2 years financial projections, just so that they can sort of get their head around where the income's going to come from, how they're going to cover their repayments. So the more information a new start business can supply to us, the bigger the panel of lenders we've got to go to. If they come to us with no business plan, no financial projections, not really any experience in the sector, then we have a sort of a very small amount of lenders. Again, we can still get those transactions done, but we're really limiting the market. And the more you limit the market, generally, the higher the price the customer will pay.
Yeah. Now, this may be a bit of a controversial question, but I feel I need to ask it anyway, just to give a balanced side to everything that we're speaking about today. What do people need to be aware of before they can access business financing?
Great question, actually, because I think firstly I would say a basic understanding of business finance. All too often business owners and finance directors, etc., don't have perhaps the level of knowledge that perhaps they should when it comes to finance. That's not their fault, it's probably the education system in the UK, where we all leave school with very little understanding of finance and personal finance. I think that sort of translates into the business world. But a basic understanding of business finance, a bit of an understanding of the finance market and how lenders look at applications. I think that's always quite valuable for customers. A general understanding of the different finance products available in the marketplace, and how they can be used within a business. And then lastly, I would say more around the actual limitations of funding, because so many customers use finance for the wrong things. Or finance products for the wrong things. I think we have a lot of customers that ring us up and they say, "Oh, we're looking for a loan." Okay, that's fine. Now, a loan by definition is it's not secured against an asset. It's literally cash pumped into the business bank account for the customer to do what they see fit with. When you actually get talking to these customers and you find out they're purchasing vehicles or machinery, or it's to fund an upcoming contract and things like that, actually a lot of the time it's not a loan they're looking for. What they actually mean is, I'm looking for business finance. Here's my problem. What have you got to sort of solve the problems? And that can be a combination of products. So I know that was quite a long-winded answer, but just to answer that question in brief, a better understanding of business finance.
Better understanding,
and a good finance broker should be more than happy to spend some time on the phone to a customer and run through the sort of market in general, how funding can be used.
Yeah. So it's really important that before someone signs up for something like this, that they're very much educated. They get the now the controversial question that I had, that wasn't it. It was what may the disadvantages be for a business when it comes to getting financing?
Yeah. Not too many disadvantages, I don't think. The ones that sort of come to mind is that, look, borrowing is not free. You know, all of these lenders will charge interest. So if you're a business that has a huge amount of cash in the bank and you've really got no way of utilising that cash, then finance probably isn't for you. You should probably be paying outright for your purchases and saving the interest. The other side of that as well is businesses taking on debt where they can't really service the monthly payment. So I suppose in summation would be you've got to make sure it's right for your business. Firstly, if you've got a load of cash in the bank, does it make sense to finance kit rather than pay interest rather than paying outright? And then secondly, can you actually service that debt as a business? They're the two main negatives. And the third one to go with that is something I always speak to customers about is worst case scenario. Look, if this business were to fail, what would be your personal liability over that debt? What would be what avenues will be available in order to sort of get out of that agreement and things? So just a basic understanding of that is essential.
Yeah. Now, in comparison to, those are the disadvantages of business financing. What about when it comes to what you've said there against getting that from a high street bank? Which one? What's the? I don't want to use the word greater evil, but what's the weighing the two up? I know you're probably going to be quite biased here, but weighing the two up, which route would you recommend for someone starting up in this particular year that we're in right now to go down?
Yeah, so as a brand new start business, my recommendation would absolutely be to use a finance broker. Banks are historically, ever since the 2008 recession, have been cautious when it comes to lending, and the amount of new start businesses that we process as a company whereby they have tried to secure funding from their bank and they've just been unsuccessful with it. And then I suppose when it comes to the bigger companies, again, you've got the option of going to your high street bank. It all comes back to what we were sort of discussing earlier about not having all of your eggs in one basket. So by using a finance broker, we can create relationships with 2, 3, 4 different funders for you to start to build that rapport and give you some significant credit lines moving forward that you can draw down on. But ultimately, finance is finance. So the cons to finance are going to be the same using a finance broker as they would be a high street bank. You know, we all charge interest. You've got to service your monthly payment. So yeah, I would say not too many differences between bank and broker, to be honest.
Okay. My last question, well, almost there. So once a business accesses external finance, would they have to give away shares of their company in order to do that?
No. No. So everything we do as a business is debt finance. So that is just paying interest. None of our lenders nor ourselves will take any shares in a business. What you're sort of referring to there is equity funding. And again, it's not something we get involved in, but that could be angel investors, it could be crowdfunding, there are certainly some investment houses out there that will invest into businesses and take a share. But concerningly, where we've seen that in the past, where customers have approached us, and once we start looking at the application, it's clear that they've had some equity funding into the business, and you sort of speak to them and say there was the one particular one last year that had got some equity funding into the business, and when I spoke to that customer about what they did with that money, they used it to buy vehicles.
Okay.
So why would you? They gave away 25% of their business in order to access some funding to buy vehicles. Well, that's the easiest thing in the world to finance vehicles. That should have been done on debt finance, because there's no point giving away 25% of your shares to an angel investor that's just going to lend you the money for the vehicles when we could have done that for you, and you not had to dilute your shares. So it's everything we do is debt funding, but it's again, before you get involved in any equity funding, I would say pick up the phone to the likes of ourselves and just have a conversation about debt funding. Because a lot of the times I think people do it because they don't believe that the funding they need is actually available to their business. And again, with a panel of lenders as big as ours, quite often the customer's wrong in that scenario, and we can get the funding needed.
Yeah, well, that's quite good to know. The last question I have from you, what are the top 3 bits of advice you would give to businesses about business financing?
Okay, I'm probably going to sort of reiterate a couple of points that we've probably already spoken about through this the last hour, but knowledge is everything. Finance is undoubtedly the number one tool for starting, growing, and expanding businesses. With that being said, it does concern me just how often we speak to business owners, finance directors, etc., that just don't have even a basic understanding of finance, and quite often that results in them getting the wrong products for their business, and quite often will stunt growth as well. So more knowledge over finance is definitely one of them. Secondly, again, I know I've mentioned this earlier, but finance is not just for those businesses that don't have the funds to pay outright. Finance is available to all businesses. It can be used in a way to reduce your tax liabilities and things like that. So definitely pick up the phone when it comes to that. And then the last point is using the right finance products at the right time. We see a lot of situations where customers sort of ring us quite last minute in need of cash flow funding. As an example, we had one a couple of months ago for a scaffolding company that had left it until they got a few unpaid invoices from their customers. They'd left it right until the last minute to speak to us about funding, and the commercial loans that were available to them, because of the situation with the customer already, their bank account had been diminished. There was very little funds available. It was clear to any lender that they were in serious trouble now.
Yeah.
As soon as we spoke to the customer and do a little bit of digging about, it turns out that they bought £1.5 million worth of vehicles only 8 months earlier, cash outright.
Yeah.
And had they have financed those vehicles, they would have had that £1.5 million in the bank.
Yeah.
They wouldn't have needed us for the cash flow funding. Now, the interest rates on cash flow funding, as a ballpark, is probably double that of what it is on vehicle finance.
Yeah.
So luckily, what we ended up doing with that customer was actually refinancing the vehicles that they had already purchased. But the sort of moral on that one is really looking a little bit further ahead, keeping some additional working capital in the business, and utilising the cheapest forms of finance. So again, when they purchased that £1.5 million worth of vehicles, we probably could have done that at the time. Interest rates have risen a little bit, but looking back at when they purchased that, we could have probably done that at maybe 3% as an interest rate. They'd have been far better off doing that and retaining that £1.5 million in their bank.
Yeah.
For a rainy day or for situations like this. So really just making sure you're using the right finance product at the right time, and that a lot of that comes down to pre-planning and really looking at your financial projections, understanding if there is going to be some pinch points, then it's our job to approach lenders sooner rather than later. The earlier we can approach a lender, the better.
Yeah.
And again, we can educate customers as to how to position themselves best for those lenders.
Yeah. Yeah. We've got quite a few comments and stuff, so we're going to go through that.
Yeah, absolutely.
Now, which is really good. So probably read this together. It said, gosh, I'm going to try and read this name. Pixabulus. Sorry, if I'm butchering your name. So Pixabulus Designs.
I think it's Pixabulous.
Okay, what he said. Pixabulus. Yeah.
Pixabulous Designs.
Pixabulous Designs. Hey, we missed your intro. Could we know and talk about the person's details? So I think they want to know a bit more about yourself.
Yeah, absolutely. Yeah. So I'm Chris Martin, the founder of Origin Finance. Been in the industry now since 2007. I did 13 years working for the UK's largest privately owned finance brokerage, And then in 2019, I set up Origin Finance with a view to being more educational as opposed to salesy. I think particularly when it comes to finance, because a lot of people have some knowledge gaps with it, it's certainly not the right thing to be salesy when it comes to finance. I think it's we get a lot more out of our customers, and the customers get a lot more out of us when we can educate them and make them more comfortable in a situation where they can ask questions and don't feel silly asking those questions, because I think it's finance in general is quite a taboo subject, particularly in the UK. I think it's stupid personally that it is a taboo subject. I don't know why we don't talk about it more. So yeah, that's sort of us and me and what we're all about.
Yeah. Another question here from the Office Genie. Might be covered along the way, but how does Funding Circle fit in? Do brokers work with them, or would one need to go direct?
Yeah, great question. Yes, absolutely, brokers do work with them. I work with them. I was one of the first brokers to deal with Funding Circle when they launched their broker division back in, I want to say 2012. So Funding Circle is one of the lenders we probably do the most amount with when it comes to loan money. And although they do have a direct route, I think personally the knowledge that we've gained from processing so many applications with them, I think Funding Circle, particularly, you're better off going through a finance broker that's got good experience with Funding Circle. And just to clarify on that as well, the pricing model is exactly the same through a broker as it is Funding Circle direct.
Yeah.
So we don't charge any fees to a customer.
Yeah.
We're remunerated directly by the lender. So if that particular customer, whether they went to Funding Circle directly or through ourselves, the pricing will be exactly the same. So it doesn't cost the customer any extra to use a broker, but you are accessing that broker's data, resources and ability to get transactions accepted and over the line. So that's actually a great question.
That's fantastic. That's actually really fun. We have a question here which says,
so from Taranveer?
Yeah, Taranveer Singh from India. I am running a small business, a small IT firm in India. I want to serve my IT services in the UK. How do you get finances for something like that?
Yeah. So first of all, ourselves as a business and generally the UK market in general, you have to be a UK-based limited company or a UK-based company, not necessarily limited. But so that particular customer there, the first thing they would need to do is have a UK base, and probably I would suggest registering a UK limited company, and then we can look at funding that particular limited company. So yeah, absolutely, we've got several of our customers are like that actually. One that we've just supported, who owns a few, or his family own quite a few quarries in India. He's just moved to the UK and set up a new Indian sandstone supply company, and we've funded probably £3 million for him in the last 2 years.
Wow.
So yeah, quite a good example, both based in the same area. So.
Wow. Back to Pixabilis Designs again. It says, hey Jacob, could you ask Chris to, I think, more to inform us about government banks' name for business funding or investors are good for it?
So government banks, the only one that we've sort of got at the moment is the British Business Bank that's got, they've got a few products out there at the moment. There's the startup loan product in association with Virgin, I believe that is. It's just been rebranded. In terms of government funding, the only government funding available at the moment, as far as I'm aware, is the Recovery Loan Scheme. But the Recovery Loan Scheme is a hangover from CBILS, which was a product launched in COVID. And the latest iteration of the Recovery Loan Scheme is actually designed more for the lender's benefit than it is the customer. So customers can no longer just apply for the RLS scheme. They would need to apply for funding with a particular finance company, and if they didn't meet the full criteria of that finance company can then look to put them onto the RLS scheme. But the RLS scheme now generally is more expensive than traditional lending and has been for the last few months.
Yeah. I've got another question here. Oh, Pixabilis Design says, correct, you got the name right. Sorry about that. A question from Claire Harry. What is the best route for new businesses to get funding when they have no accounts to back them up? That's a great question.
Yeah, absolutely. I would say in that scenario, you certainly can try your own high street bank, although you're probably not going to get the results you want, being realistic. In that particular scenario, I think that's where you should be working with a finance broker. We have a number of lenders that will fund businesses that haven't yet filed a set of accounts. We've got a number of lenders that will fund businesses that haven't yet had a penny of income into their business. So I would say, particularly with was it Claire? Did you say?
Yeah.
Particularly with Claire, I would suggest if you want to actually give me a call, Claire, I'll happily have a chat with you on the phone and just sort of educate you a little bit as to give you some pointers and things like that. But certainly we've got the right lenders on our panel for you in particular. Yeah, that's cool. Definitely one for a broker.
Yeah, that's cool. Another question from the Office Genie here is Chris paid by lender, or are his fees taken from the funding we get?
So no, we're just to clarify on that, we do not charge customers any fees. Everything we earn is remuneration directly from the lender.
Yeah.
So yeah, absolutely nothing that you need to pay to us. It's all done between us and the lender.
Yeah.
So yeah.
Oh yeah. Yeah. So we were going to say, how do people get in contact with you?
Absolutely. So I'd love to have a chat with any of your viewers, listeners. And one thing I would just say is, I don't expect to have a chat and us do business together. That's not what we're about. I like to just have chats with business owners, finance directors, and as long as at the end of the call we've had, you've got more information than when we started the call, we've done our job.
Yeah.
Off the back of that, we do end up writing a lot of business with these people just because I think we're able to be a bit more educational. But if people want to get in touch with me directly, give me a call on the office number, which is 01604 926 226. Alternatively, if you visit our website, which is www.originfinance.co.uk, there's quite a lot of information on that website. Anything that you can't see on there, or if you've got any questions on there, there's a live chat feature that comes straight through to Vicky, our office manager. She can put you straight in touch with me or another account manager. But it's certainly just pick up the phone. There's no sales pitch from us on it. We just like to have conversations with people, which I think is where we differ from our competitors.
Yeah. Oh, I'm sure Pixabilis Design is saying that your website's not working for some reason. I'm sure it is.
Oh, we were on it earlier. I'll have a quick look at that when I get back to the office, but we were on that earlier and it was working absolutely fine.
Let's have a look to see if there's any questions on here. That's all good. Anything else? Any final remarks?
No, I think I've covered it. Just to reiterate, I just want to speak to people. It's finance is a taboo subject where a lot of people just are too scared to ask questions about it, and all that does is just hinder the growth of their business. Just pick up the phone, speak to me, my colleagues, other finance brokers, our competitors, whoever, and just get a better understanding about business finance and how it can be used in business to grow and expand or start your business. Absolutely. There's no limit on time. There's no limit on calls. Just give us a call, and we'll spend as much time and give you as much help as you need.
It's been a fantastic having you.
Really enjoyed it
on this morning. Very, very insightful. I think I did my job to drain you of as much knowledge as possible for the people watching and listening. We look forward to more great stories about how business finance is helping change and shift the dynamics of different people's businesses. So thank you for joining us this morning.
No, thank you very much for having us. It's been absolutely amazing to be on here.
Thank you so much.
Thank you.
Just before we go, for everybody who is watching and listening, if you would like some more information about UKBF and UK Business Forums and what we do, we are the largest online community of small and micro business owners in the UK. I'm going to put some information in the chat about who we are as well. So go ahead, check us out. There's a lot of resources on starting up in business finance, and there's two podcasts. One podcast called Drive, which is about us speaking to business owners and finding out about what drives them, what pushes them, and what keys you can take from their story to help you in your own journey as well. And there's another podcast coming out in a couple of weeks' time, Grow, helping you figure out the keys and the tools that you need to grow in your journey in business. So thank you guys for joining this morning, and we will see you on the next webinar in 2 weeks' time. Thanks again, Chris.
Thank you. Take care.